Retail stocks have rallied over the last 3 months thanks to a better-than-expected holiday season. Joining us now with his top picks for 2024 is BMO Capital Markets Senior Research Analyst Simeon Siegel. Simeon, Happy New Year.
Happy New Year. That was a mouthful.
It was. And I tried to say it maybe a little too fast.
You did a great job. I got to work on my name.
Well, it's good. Nike and Planet Fitness, you both like both of them. You expect them to rise about 10% from here. Why is that? 10% is a lot.
10% is a lot. You know, it's funny. You think about how much Nike was down in a day, and 10% seems like a blink.
Yeah.
So two different ideas, two different stories. Planet Fitness, listen, we're in the season of New Year's resolutions. This is Planet's month. And frankly, with all the concerns we're talking about, you want a business that has both convenience, many locations close to you, at the right price. And so I think Planet is its own story there. I'd expect it to compound. And what's interesting about Planet is they actually did not participate in this material rally simply because of rates. They saw their bump earlier because of earnings. I like them to catch back up to the rate rally, too.
Okay.
So that's Planet. I think there's an interesting story there, and I love to see them compound. Nike is a reversion trade. So Nike, we just had this print where you lost, I think the headline was more in one day than in 26 years. I mean, this was a huge drop, except if you rewind and you realize 3 weeks earlier it was flat. And so when I look at Nike, the one thing I want to focus on is the operating profit dollars. Sounds obvious, but people normally look at revenues, they look at a story, they focus on other things. Nike's business profitability grew 15%, and the stock was down the most in whatever 26 years.
Okay.
That's a big number.
That is. Okay, so you say this rally over the last quarter has been a sentiment rally, not fundamental. So what impact are earnings going to have when we start getting that data that drives the fundamentals for each stock, especially since in the different categories, luxury, discounters, et cetera, we've seen such differences in execution?
So I love that you brought that up, because what I keep hearing is that everything is clustered. We're either high income or low income. We're either low. It's just all over the place, but it's clusters. And it's just not been true. For the last 3 years, it's been true because with COVID, it was all about the macro. There was no inventory. There was too much inventory. There was no price promotions. There was a ton. Supply chain constraints, the world. You can play micro stories now, and that's a really good thing. And so we watched companies that sell the exact same thing to the exact same people have exactly different results. Coach was up, Kors was down, Athleta was down, Lulu was up. Like, you can keep them with big box, off price. Like, you watched similarities, but execution divergence, and that's great. And so your question, so what happens now in a rally where valuations changed, but multiples did not, but numbers did not? Well, those numbers better grow into those valuations, otherwise we're going to have a problem.
Yeah.
And so what's interesting, and that's why I brought up Nike, in October, we were a world apart, right? Everything is so great now. 3 months earlier, it was wild despair. And so October, everything was negative. The retail group as a whole was down tremendously. And then Nike comes out and reports their earnings, because they're always early or late, depending on which way you want to look at it. And they give you a reminder that they're a real business, and the stock erupted.